Huge spike in realized vol. Bitcoin realized up to 94, ETH up to 120, even higher actually, but in that ballpark. Front end implies could not keep pace with realized. So we saw about a 20 vol point spike in the front end. So we've got Bitcoin front end at around 65, whilst we've got Ethereum front end at around 90 right now. Carry has flipped firmly negative in the order of magnitude of 30 vol points, which is basically annihilating the gamma sellers. So I've got a short gamma strategy, which took a beating this week as well, but that's the nature of the beast. You can see it on here as well on these OHLC charts. When we break the implied, I mean, look how dramatically we broke the implied ranges, right? The dotted line showed the implied ranges, and we not only did we break them, we overshot them by about a factor of 2 or 3, basically. So that is just going to show you how much gamma is killing people, right? Short gamma. And then the market now is in a period of stress. So we're probably going to need some positive news flow, some that is considered, quite material to put in a bottom around here. Obviously we haven't got it yet. But I do think the market is kind of supercharged to respond to any bits of news flow. So look out for that. If you look here, the term structure obviously flipped very inverted. No, it shouldn't be a big surprise. Back end vol did very little actually. ETH was down a point in the back end on the week. Bitcoin was up 1 point, but all the action is in the front end. March was up about 7.5. Weeklies were up about 16 in Bitcoin. Similar moves in March on Ethereum, but front end was up even more at about 24 vols. You can see how the kind of time series played out. Generally, you're seeing the curves were trading pretty flat, and then they would spike in the front, and then they would revert back to flat. That's where you can see this red line. It's like coming in waves where it'll spike up in the front and then revert, spike up in the front and revert. So we are seeing these waves of front end spiking and taking the curve inverted, only to get sold back again fairly quickly, right? Within a day or two. In terms of puts, you can see put skew reached about 8 vols in the front end on Bitcoin, reached about 20 vols in Ethereum. So really steep there. You can see that here on the term structures of skew, moving into a steeper contango. Long end skew remaining for calls though, right? If you look past June is still in a call premium on both assets, even on Ethereum, which is somewhat surprising. And that suggests to me the market still thinks the bullish regime is intact, and this is nothing more than a violent correction. And we have seen violent corrections in bull markets in crypto before, right? So right now, the majority, the consensus within the vol community is we're still going to be higher, and we're still going to be in a bull market towards the back half of this year, basically, right? So when that changes, we may need to reevaluate and say, okay, it looks like the bull market might be done, and we need to actually run a much higher hedge ratio across our crypto. So I have got a hedged crypto strategy that I've been running. I had about half my Bitcoin in there, so I've managed to insulate myself from the move in a chunk of my Bitcoin, but I didn't really have any Ethereum in there. I didn't really have any, like I said, I didn't have any of my Solana in there. So, my choice was to not allocate too much to that hedge crypto vault, which I've ended up suffering for. But for those of you who have been trading alongside us and been learning from the process, if you allocated more to the crypto hedge strategy, then you would have done well, because that strategy has been very robust and has protected the capital well in this 15% drawdown in Bitcoin. Okay. And then looking on the relative value side, ETH Bitcoin spread at 30 vols in the front. The downtrend in ETH Bitcoin cross continues. It's basically struggling to bounce. Doesn't seem to be able to catch any bounces. That front end 30 vol spread is quite justified still based on realized, but how much higher is that? I don't think that's got much room to go higher, to be honest. So on the vol side of things, you would probably want to be short Ethereum, long Bitcoin from a vol perspective, but if you can stomach the gamma, basically, right, which is debatable. You can see that does revert to about 10 vols in June. So market thinking this isn't going to last all year. It's a relatively short-term phenomenon. Although it has been fairly persistent for a while now, that high realized on ETH. And then the skew curve, you can see relative 15 vol points more put premium in the front end, but we're looking pretty neutral as we go from April onwards. The curve's quite flat, basically. Okay, so that 15 vol point premium to puts that is in Ethereum relative to Bitcoin is basically saying that the crash risk in ETH is much higher than in Bitcoin. Bitcoin, if you look at the chart, is still in a nice, solid, uptrending market. Yes, this is a steep correction, but it's not broken the technical picture. Whereas you look at ETH and like all bets are off. We have no idea where this thing wants to go. It could easily go at 1500, and technically major levels have been broken. So that's being reflected in the skew, and that's why you're seeing a much higher put skew in Ethereum relative to Bitcoin. All right, guys, that is your quick vol summary for this week. Hope you guys survived this one, and I'll catch you guys next time. Thanks.
Hi, everyone. Thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights and a whole lot more, you can sign up at options-insight.com. I'll see you soon.